Hey, this is Macroatlas. Today we're going to actually revisit the theory of the great consolidation for Bitcoin. And we'll assess also the role of liquidity that is playing out and how the Fed's balance sheet is actually going up and liquidity going up. And that's why we're seeing some renowned strength into risk assets such as Bitcoin. So the first thing about the great consolidation period, it just simply comes from assessing Bitcoin's historical market structure price action and devising some theories from that. If we revisit previous bear market cycles, we see after the first leg down move, you form first the bottom or the support line for the great consolidation period, and then we consolidate within a range throughout that period until we break down from it. Now, there are two areas that should be considered when analyzing this theory. First is the resistance and support that forms the lower and upper range relatively to the great consolidation period. The support comes as the bottom of the first leg down move is found. That's the support of the consolidation period, and the top side of that consolidation period usually is formed from the relief rally that happens within the first leg down. So in this case, it would be right there. And we see that playing out again and again in history. If you go back, that's the first leg down move. That's the support line, and the resistance comes from the major relief rally that happens within the first leg down move, right? If you revisit again, support, and somewhat you can say this is a resistance. This was some sort of deviation, but of course it's not pitch perfect, but we can form some kind of a speculative range from which we can work around. So if you take the statistics of all that consolidation periods for Bitcoin, from bottom to the top, the percentage move, and the duration that it has elapsed for, you take all that, and then we can form that range right here. Now, the length is the average for that box, but from the bottom to the peak, we took the minimum of the 3 data points that we have. And that's because if you see here in the previous cycle, it was 50%, and second bear market, it was around 100%, and the first bear market was around 150%. Now, if you correspond that and try to match it to the current environment, you would see that 100% would take us almost to the range highs, right? And therefore, we have to adapt the theory to get the lower band, which is the realistic for the current market structure and the current phase that Bitcoin is in, which is a maturing risk asset. So we wouldn't get that increased volatility, right? A second thing we can actually notice is that if we go to the weekly, the 100-week SMA actually does a good job at teaching us how price consolidates around that range. So usually when we break it, we do not break above it until the bull market comes, right? We break below it, we don't break above it until the bull market comes. And similarly, we break below it, we don't break above it till the bull market comes. And that 50% increase, which is the lower bound, does correspond to not breaking the 100-week SMA. Historically, we had not broken it, but that could actually change. But for the time being, I think it would be difficult to, if we are still in a bear market, to break above the 100-week SMA and above the previous market structure that formed a lower high. Forming another high above that would mean the regime is shifting to a bullish narrative. And while we might have had a few weeks of positive, I think this can be attributed to the fact that the Fed has been injecting the market with liquidity. This is just some of the recent ones. There have been some quantitative, like plumbing or tactical liquidity injection to just make sure the private credit does not collapse and support the banking industry. That's how they frame it. But that amount of injection is quite large. It's every week or so we're getting around 5 to 7 billion of monetary injection from the Fed. The next one is going to be, as of recording this video today, and the next one will be 27th of April. So you can see we had just recently 3 market plumbing by the Fed in a short period of time. That totals more than 17, 18 billion dollars, and that's a lot. Now, even though they're just buying 1 to 3 month T-bills, which doesn't qualify it as quantitative easing, you have to buy a long-term dated bills, but it is good enough to be bullish for risk assets to say, yeah, there's liquidity, and right now we can be in some sort of bullish regime, short-oriented regime, right? The market structure confirming this, we failed to break below the previous low, and we had made just a touch on that low there, and we just bounced off there without any meaningful correction. And we formed a higher high, of course, for that range. Therefore, maybe the theory we touched on a few months ago at the start of this consolidation period is playing out, and this consolidation period may be elongated, and it may, historically, it could span up to, if you go here, it should be something around October, but I doubt it's going to be October, because October, end of September, which is around October, where we should find the bottom for Bitcoin. Usually bottoms 1 year after the peak, right? And that has happened historically multiple times. So that would 376 days or so. So the theory is in line. And what the theory says is not that we're going to consolidate for the whole period. It means that the consolidation could span the whole period, but could break down any moment, right? Because we could form something like that, right? We break down and we might have more consolidation down here that spends a lot of time, that gets us to the October low. But right now, if we make the next move leg down, right? This is the first leg down, and usually we take 2 leg downs before we find the market bottom. That's the first leg down. And if you find the second leg down, for example, there, usually you have to, yeah, maybe make it in correspondence with that, like that. Then you would find somewhere along the lines where the move would take us to, right? Markets are usually characterized with 2 major leg downs for Bitcoin. So if you look here, that's the first leg down, right here. Maybe use the line better. That's the first leg down. And then you get a second leg down. And then the third move is optional, but could also form a third but less severe leg. We've seen it before too. First leg down, consolidation, second leg down, bottom, and consolidation. Here again, first leg down, consolidation, second leg down, consolidation, and bull market. So to say that we will break down and find the bottom of the bear market now is good for a lot of people, right? Because we can finally start accumulating Bitcoin at good prices. Maybe some people are shorting Bitcoin, and etc. But let us not forget that things can take time, right? And that's where traders get death by 1,000 cuts. Yeah, there's geopolitics going on, and there's threatening and worsening macro conditions, but risk assets are liquidity sensitive, and there's not a lot of reasons to find why Bitcoin would sustain its rally, but of course there's something always in some bear market happening, and I think it's because the Fed's balance sheet is increasing. Well, they might frame it as tactical adjustments and just increasing liquidity in the banking industry. We are moving into a bullish structure for Bitcoin, and the stock market is definitely all-time highs, right? At all-time highs. So that tactical adjustment may be working on retail traders, but some serious professionals are understanding that net liquidity right here is increasing, and doesn't matter how the Fed frames it. Maybe they don't want increased asset prices to increase the risk of inflation, but they see risk in the economy, so they do have to kind of support the economy financially in some way or another. So they put these narratives, right? But we shouldn't listen to what they say. We should see what they do. And what they're doing is increasing net liquidity. So net liquidity is actually the good measure of whether liquidity in the economy is increasing or not for the USA. If you just look at the balance sheet, they could be increasing the balance sheet, but they could also be increasing their liabilities, which means that liquidity remains constant, right? If everything else is constant. But their liabilities are going down. The Fed balance sheet is going up and liquidity is going up. What does that mean? There is some form of easing in the economy. It's not quantitative easing, because quantitative easing is more like a head-on approach, right? This is more like a ninja quantitative easing type of thing, like a silent thing. And one thing that can confirm that is the reverse repo actually reached zero recently. The reverse repo is the silent cushion for the Fed to support the economy whenever they need to do tactical adjustments. And that has dried up. So they have been doing a lot of tactical adjustments. And when the reverse repo it becomes volatile, it means that the stress is, there's some indecision, there's some stress, and there's something going on. Now everybody knows there's something going on, and surprisingly they have been able to keep that contained for a long period of time. They're doing a good job. But that doesn't mean that liquidity is not increasing in the markets. They are increasing it due to the fact there is a banking industry that is being vulnerable, and tensions around the world. So this is my outlook on the market update. I think we will continue to see strength for Bitcoin and risk assets, but I believe the long-term view for Bitcoin is going to be where the forces actually align and macro conditions say that, point toward that direction, that we will surely, speculative, nothing sure really is. This is not financial advice. It's only for educational purposes only. But based on data, we should be heading down, right? The world and the economy is not in the best place. It had been good, but it's been struggling for a while. And the cracks slowly will start to show. The Fed will run out of tricks up their sleeves, and one day they will have to come out and be, this is the skeletons in our wardrobe. This is everything, and the market. Who knows where the market will go, but we should always trade safe, and we should make sure that we understand nobody knows what's going on, but we all make our best guess based on data, based on market structure, based on fundamentals, and hopefully our guesses turn us on the good side. Thank you for watching this video, and I hope you enjoyed it. If you did, like and subscribe, and I'll see you in the next one. Peace out.